What is going on, everyone? Thank you so much for subscribing. If you have not already and you're watching this video, please consider it. Please, please, please. I would really appreciate it. I've noticed how many subscribers I've gotten recently, and welcome to you all, and thank you so much. I really do hope that you guys enjoy these stock analysis and learn something from them. So let's get right into Callaway Golf Company, ticker symbol ELY. So Callaway is a golf brand, and they own, different kinds of brands of putters and golf balls and golf apparel. But the biggest reason why I like Callaway, and I'm not even wasting a minute into this video before I tell you, is they bought Topgolf, the entertainment golf centers, for $2 billion 2 months ago in October of 2020. They bought them for $2 billion in all stock, so they didn't have to spend any cash, and we will look at their cash pile. And what I think about this is this. If you haven't been to a Topgolf, I have not personally, but I know friends that go all the time. They're mostly in the South, places that, they can be open almost all year round. And they look like so much fun. Everyone takes videos of them. People love going. You don't have to know how to golf to do it. And Callaway used to own a 14% stake and said, you know what, forget it. We're going to buy the whole darn thing. So they bought all of Topgolf, like I said, in October of 2020, so 2 months ago. And I really think that this is going to take Callaway to huge levels, because in 2020, Topgolf had revenues of about $1.1 billion. And again, we're going to look at the income statement of Callaway itself, and you're going to notice that that number, integrating Topgolf's number into Callaway, is going to take it very high, and it's only a positive upside in my personal opinion. Now, we see the analyst target of about $25, and there are 5 buy ratings and 1 hold. No sells out of the 6 analyst offerings. It's also listed as a strong buy. The stock analysis lists it as a 5. This is another one where I think it could actually reach in the 8, 9, 10 area with integrating Topgolf in 2021, and we should see this, become a very much highly wanted, highly valuable stock analysis. So let's get right into the financials of Callaway. Like I said, in 2019, Topgolf itself is expected to bring in about $1.1 billion in revenue across all of the countries that they're in and just their US locations. Callaway itself has about a $1.7 billion revenue. So now you're looking at about a $2.8 billion in revenue, and I'm sure that Topgolf is profitable, so we should see that enter in the mix as well. But just taking that out, because this is not included in Callaway's numbers, the whole Topgolf thing, we can see that they have had a rise from 2016 going forward, a rise in revenue. And you can see it went from 2017 to 2018. It went about, just almost close to $200 million, a raise in revenue. But then from 2018 to 2019, it grew almost $500 million in revenue. That's a huge exponential growth rate, and that is something that we're going to see, like I said, with integrating Topgolf, go higher. We also see that they do have a net income. Like they're not profitable. They do make some money, and again, I think that this is going to go higher with Topgolf being integrated into it. Now let's look at the balance sheet, and this is okay. I mean, this is a golf company. Remember that. It's like a golf apparel, golf club, golf ball company. Let's try to keep that in mind and realize it's probably not going to be, like super great or like, astronomically better than any other company, but it's just an interesting take with them now moving into the more entertainment business. It's a place to go, it's a place to have fun, and a lot of young people go to Topgolf locations. So let's wait for the balance sheet to load for a second. And as we can see, in 2019, we had a pretty good sized cash balance. It's the highest that it was since 2016. And we can also see that current assets was about 789 million versus total current liabilities of about 523 million. So we have some good working capital. They have positive working capital, and as far as debt goes, they have had almost no debt. Any debt that they've had looks like they've retired it and then brought back a little bit, and then it looks like they probably made some type of acquisition here back in 2019. I'm not sure off the top of my head what this is, but I'm sure they made an acquisition, and that is why they financed, or they, invested somewhere in their business, maybe new, I don't know, just something. So that's why that grew. And then if we look at the cash flow statement, again, the acquisition of Topgolf, for like the fifth time of me saying it, is not included in these numbers, but we should see it whenever the 2020 numbers come out for Q4, because again, they were acquired back in October, so early on in Q4 of 2020. So we're not going to see it on the acquisition side, so to say, but I did see this earlier that they actually do have some interesting, uh, debt movement in debt, uh, debt item on the cash flow. So if we go down, okay, so acquisitions, yeah, see the 463 million that we saw in debt in 2019, they acquired something, so that does relate to that. Whatever they bought, I'll go back after this video is done and I'll look and see what they bought. But if we see here, see long-term debt issuances, they did not really issue, they've issued no long-term debt. So I misspoke there. It was actually short-term debt that they have been making, payments on. And they even made a long-term debt repayment of about 455 million in 2019. So that's gonna, take it's gonna take all those short terms away, as well as anything that they had outstanding in the long term. So pretty much they have no debt on the balance sheet. So, and whatever debt that they have or that they create, they are paying it down. So let's look at a portfolio. So if you had invested in Callaway, its IPO was back in March 1992, but our numbers only go from January 1993. So if you had invested $10,000 in Callaway Golf, you would see a final balance of about 66,000. It's not that impressive. That's okay. Like, you would have done way better if you had invested in Apple, Microsoft, or just the S&P since, January 1993, $10,000. But you did grow, 7%. That's better than a bond, I guess. But what I'm expecting is, this since 1993, like if we were to go from, what is this, January 1993 to, let's just say, September of 2020, literally a month before Topgolf was announced to be bought, I would say that this is correct. This looks right on par, no pun intended, for a company that sells golf stuff. You're not going to get huge numbers, but if you go into a business like buying Topgolf, this is something that you are going to see go way bigger as far as compound annual growth rate for this company. I personally think it's gonna go way higher. So it's a waiting game. We'll wait and see. Let's see what 2021's numbers are. Anyway, thank you guys so much for watching, and see you later.